Hey guys, everything in today's video comes from Century 21 Accounting Textbook by Cengage. We're going to start in finishing up chapter 10. The last chapter is 10.4, posting from the cash receipts journal. This posting process really is just the same similar concepts of posting from the cash payments journal. You want to post the cash receipts amounts in the general to the accounts receivable ledger only if it's the accounts receivable. Okay, so that's the first thing that you want to do. You want to just post the accounts receivable ledger. You want to post to the accounts receivable ledger. Okay, so Lake Automotive, post reference 130, and here's the amount. So we go down, we put the date, we put the post reference, we put the credit because it's a credit. It says credit, so we put it as a credit. And it's a debit balance. So when we have a debit balance and a credit, we subtract. And now we're down to 606.32. Then we come up and put the post ref 130. Okay? So now that's posting from the cash receipts journal to the accounts receivable ledger. The accounts receivable ledger, again, is your just more specific accounts. Now broken down, I should say, when it comes to accounts receivable. So here's the entire accounts receivable ledger laid out for this company. So they're saying Belk and Jensen owes us this much. Edson Hospital owes us this much. Lake Automotive owes us this much. So this is money that we should receive sooner or later, okay? And we want to break that down into each person, into each individual vendor, so that we can see that at one snapshot. But we also, I'm going to go a little backwards, we also want to post in column totals. Okay, so we not only want to post to the accounts receivable ledger, but then we want to post to the general ledger. Always both. Honestly, we want to post to every ledger that we can to keep things up to date. And those ledgers include accounts receivable ledger, accounts payable ledger, and the general ledger. Okay? But in order to post anything from the cash receipts journal to the general ledger, we have to total, prove, and rule. Total the columns, rule, draw that singular line, prove them. So we totaled the date, totals, added up the entire columns, and now we need to prove that the debits equal the credits. So we just put it in this nice little graph. General debit, general credit, nothing. Accounts receivable credit right there. Sales credit, sales tax payable credit, sales discount debit, cash debit. Okay? Then we total these. If they equal each other, we can double line it, and it's proved. Proving means debits equals credits. We want to prove that. And we did. So we know we made no mistakes in the cash receipts journal, and we can move on to posting. Okay? So this is total, proving, and ruling a cash receipts journal. That's what this is. Total, proving, and ruling a cash receipts journal. Then they show us this quick intermission is what I call this. This should have came at the end of the chapter. So I'm going to move on to the posting and come back to that. So then we have posting from the cash receipts journal to the general ledger. So once we go down and we post everything we need to the accounts receivable ledger, now we can post to the general. So we already have all of this. It's proved and ruled, and we can now just post it. All we're doing is posting it. There's no real trick to it. You just carry down the date. The post reference is cash receipts 11. It's a credit balance, so I'm going to put it as a credit. And if this is a debit balance, you subtract it. And we get 10,498. Okay? And we just keep going with that. We need to bring up the post reference 1130 and go on to the next one, sales. Sales is the 43. Okay, so we put the date, post reference CR11, whatever the page number is. We bring down the 43, and this is a credit. It's in the credit column, so we add it to the previous one. Bring up the 4110, and that's our post reference. We keep going through each one of that until we've posted everything. So this is that general ledger postings. And on the next page, you can see the completed accounts receivable ledger once all of those are posting. So we can easily look at this and say, okay, Edmonds Hospital owes us $639.88. Easy. Skinner College owes us $3,149.53. But when we look at it in the cash receipts journal, like, you have to pretend that this is a full journal page. Like, this is just filled. That little gap is just everything that's missing in between there. They don't want to give you the whole sheet, but you want to pretend this is a full journal page. And if all you saw was this full journal page, it would be very hard for you to see, how much does Belk and Johnson actually owe us. And then you can see that this is the accounts receivable total. So that's our balance for the accounts receivable total. So people owe us $10,400. Who owes us money? These people, right in the general or the accounts receivable ledger. Then on the last section, it talks about the schedule of accounts receivable. We did a schedule of accounts payable too. So you do the who, the what, and the when. And then you list out all of the accounts receivables that you owe. So that's all listed on this page. So you take each one individually and their bottom number, you bring it over here, their bottom number. And when you add all of these together, you should get the same amount that's in your accounts receivable. And we do, $10,498, $10,498. Okay? So then that's how you kind of prove the accounts receivable ledger is accurate, that you copied all those numbers over accurately by completing a schedule of accounts receivable. Because we know that this number here equals this number here. So I'm going to just go back and cover that last section here, proving cash at the end of the month. We prove, total, prove, and rule for cash receipts journal. But companies also have an internal control where they want to make sure that the cash that is recorded on their check stubs, as they're writing checks throughout the month and keeping track of that, is also the amount of cash that they actually have on hand based on their journals. Okay, so the check stubs in themselves are a type of source document that we can reference, and we should keep track of the balance on the check stub. But we also need to just double check, hey, is the cash that we had journalized on hand, is that the same as what we've written on our check stub? And so to do that, we would look at the end of the month and say, how much money did we have at the beginning of the month? $18,941.69. Plus, how much money did we receive during the month? Well, we received $57,069.84. That's going to give us, when we add those two together, the amount of cash we had at the beginning of the month plus the amount of money we've received during the month. We have a total of $76,011.53. Then we want to subtract out less total cash paid during the month. So our cash payments that month is $23,546.38. So we subtract out how much we paid during that month to get equals cash balance on hand at the end of the month. This number minus how much we paid. So we started with this. We received this much during the month. And now we have a total. We subtract out how much cash we paid during the month. And we have $52,465.15. Well, up here it says the balance on the next unused check stub is $52,465.15. So we also placed it down here. Checkbook balance on the next unused check stub. We did the same. If this number equals this number, we're good. That means that cash is proved and we didn't make any mistakes. If something if they didn't equal each other, we made some kind of mistake and we'd have to go backward and fix it. And it's a pain to do, but we need to make sure that we're accurately recording cash. So take your time when you're doing these things, because the details count. One number off and you've messed up everything, and that can be frustrating. So tune back in for Work Together 10-4. Thanks.